Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on natural gas. So the bears are taking over the daily time frame, and we had a bit of a bearish reversal head and shoulders pattern that did end up playing out. And here is the left shoulder, the head, the right shoulder, and the neckline was down here at this low 313 support. So as far as I was concerned, the bear break occurred back here on, let's see, that was Tuesday. And even though the bulls did buy that dip and close above that support, the fact that we had broken below the lowest prices that we had seen on the previous two consolidations, we broke 2 levels of consolidation that day. And again, the bulls did buy that dip, but that was enough that I needed to see to say, okay, the momentum has shifted. We are now going to see consolidation after this oversold bounce has been playing out way longer than I thought it would. It's been playing out for months. The bulls had a lot more strength there, but it's now turning around. And we could see that when we started forming lower highs and lower lows. So we had our high, we pulled back, still maintained the higher low pattern. There's our lower high. And again, that day right there is when we followed through with our lower highs and lower lows. So even though we bounced, we just set another lower high. And now here we have Friday with another lower low. So you can see very clearly the past 2 weeks, it's a lower high and lower low pattern, which has shifted from the higher low and higher high pattern that we were coming from. And you can see that rounded top and things changing here. So the resistance level to be watching is 322.3, the high that we saw on this bounce. And we can just move some of these lines there. So that's the resistance. Anything on another bounce attempt that is lower will continue the lower high, lower low pattern. Our support is the low of Friday. That's down at 308.2. And then we're looking down at 305.6 and $3 psychological. And that $3 psychological level is fairly important. If we lose that, it's a much bigger pullback. So we were looking on the weekly time frame for a lower high to be set because of where we were coming from, keeping in mind it was an all-out dump and an oversold bounce. So now our lower high has been set all the way up at 3,347, and we're going to pull back and anticipate a higher low to form, but we need to be patient waiting for that. We can see the week, we closed near the low of the week. There's no sign of the bulls in the short term. So after a bearish reversal spinning top candlestick, a bearish reversal doji, which was also an inside bar, as soon as we broke the low of that, 3132, that was a bear break on the weekly time frame of the inside bar candlestick, and now we are seeing this pullback follow through. So if we do not hold $3, I'm looking down at 2996, and we are just patiently waiting with the bears in control for a new higher low to form. And we will be confident that that new higher low has formed when we see a bullish reversal candlestick as step number 1, and then when we break this clear lower high pattern. And we can look at it on a little different time frame here. If we look at it on the 4-hour and zoom out, we can see very clear the lower highs. So we can be watching for the break in the lower high pattern here on the 4-hour chart to give some indication as to when the daily trend is shifting. But again, as of right now, the bears are in full control, and we'll have to see how much further downside is coming. Looking at UNG on the daily time frame, you can see that same head and shoulders, that left shoulder, the head, the right shoulder, and then the bear break on increased bear volume on Friday, certainly ending the week on a bear note. We're looking down at 734 support, then I'm looking at 725, and there's a gap at 716 to be watching as well. So bears are in control unless the bulls can break 765 and 769, but again, I'll just be watching the natural gas chart to be looking for that 4-hour time frame to break those lower highs. UNG on the weekly, we can see that we had the all-out dump, a bounce, and the bounce did nothing in terms of getting back. We only got back about a third of the dump that we saw. So the bears are in control of the overall trend now that we have lower highs and lower lows. And this is just another lower high. And we will be looking to see where the bulls can find some support from here, because I do anticipate we are going to see a higher low compared to the 649, 648 low. I do expect this range to tighten up before we do see a clear break, but that clear break is going to be in favor of the bears because we broke this low of November. That shifts the mindset, that shifts the momentum. And we look back on the longer term and see where we're coming from 3 years ago. And we can see very clearly that we had a nice bounce in 2016, but overall we are not doing anything in terms of reversing this downtrend. And let's look at that on natural gas here on the weekly time frame. And it's just a big, long downtrend. So a nice bounce in 2016, but again, considering where we are coming from on a longer term perspective, we are very much so in a downtrend. So we do have a longer term potential head and shoulders pattern, and it was nice to see it play out on the daily time frame. But here's another one to be watching. Your left shoulder, your head, and your right shoulder, we're now starting to come down on the right shoulder, and that neckline, that must hold support level, is down in the low 273s. And you can see that after the bounce, this would be a clear bear break if that double low were to break. So that's your neckline of support right there. And again, it's a really nice pattern at this point if it were to continue to play out. And the daily chart had a nice one as well. So I pretty much only pay attention to the bearish reversal head and shoulders patterns when the right shoulder begins forming to the downside. So I'll definitely make note of them. But here, I was only looking for the bearish reversal head and shoulders pattern to be playing out once this candlestick started forming on the right shoulder. And again, that bigger head and shoulder might be confusing. Let's get that little one drawn again that already played out. So left shoulder, head, right shoulder, and the neckline is where the price meets both pretty much right at the same level, down in the 313s, right around that level. So I was starting to pay attention once we saw the bounce, a lower high, and then this right shoulder started coming back down again. So we are now on the weekly time frame seeing that right shoulder coming down again, and we will see if this neckline breaks. Once that neckline breaks, it will be a very clear bear signal to a lot of traders. So we're still well above that level. It's just something we're keeping an eye on for the longer term. I appreciate you watching. I hope you have a great weekend, and we will see you soon.